Hey everyone, I'm David Finz, and on this episode of the Cyber Insurance Imperative, the nation's fragile and fragmented healthcare system is back in the spotlight. As I record this episode, the technology unit of a leading health insurer is still grappling with the effects of a massive cyber attack that has caused disruptions for pharmacies across the U.S. The attack, by a threat actor suspected of nation-state associations, has caused an outage to a network that helps facilitate the flow of information between healthcare providers and insurance companies. In an 8K filing with the Securities and Exchange Commission, the parent of the technology company acknowledged its discovery on February 21st of unauthorized access to its subsidiary's network. The technology company released its own statement this past week, indicating that it had taken immediate action to limit the effects of the outage and protect the interests of its partners and patients. It also stated that more than 100 of its services had been impacted, including benefits verification, claims processing, and prior authorization. The company is working closely with law enforcement and incident response providers. What I thought was most interesting about this statement was the implication that if healthcare providers are facing ongoing issues, it's their own fault. The company said, and I quote, "As we remediate, the most impacted partners are those who have disconnected from our systems and/or have not chosen to execute workarounds." Reading between the lines, I take this as suggesting the company is expecting its partners to build resilience into their own operations and intends to argue that its own liability should be limited when its partners have failed to do so. And this is what I really want to focus on today. What does third-party risk management mean in the healthcare space, where every party is so interconnected? It's not as if healthcare organizations haven't seen the warning signs. We've been down this road before. The Kronos outage disrupted timekeeping at hundreds of facilities, leaving nurses and orderlies to record their hours with a pad and a pen, and diverting their attention from patient care. More recently, the MoveIt file transfer vulnerability disproportionately impacted hospitals and other providers, leading to lost income and extra expenses. Now, doctors and pharmacies are struggling to keep prescriptions filled and customers satisfied. Even more distressing is the fact that limitations of liability abound in contracts with vendors. I don't have the specifics around this company's contract terms, but the typical return of fees won't make many of these providers whole. That's why third-party risk management is so important. The Alliant Cyber Practice can help you get a handle on these exposures so that you gain a better understanding of the cyber maturity of the vendors you are dealing with and what redundancies you need to build into your own operations so that you can bounce back from an event like this. Need to speak to one of our cyber risk consultants? Please don't hesitate to reach out. You can DM me on LinkedIn or email me at david.finz@alliant.com, and I'll be happy to put you in touch with our risk consulting team. This is also a good time to check your cyber insurance policy to see what kind of coverage you have available for what is commonly known as dependent or contingent business interruption. This coverage is often added to your policy by endorsement. It may be sublimited or have a separate waiting period from direct interruptions to your network. It's also important that you have coverage for a voluntary shutdown of your own network to limit further losses stemming from this sort of incident, either to protect client data or prevent the contagion of malware from spreading. And if your current broker isn't having these conversations with you, maybe it's time that you discover the more rewarding way to manage risk. Thanks for watching.